In this week's video, I am going to be talking about national insurance, specifically what national insurance is and the rationale behind why you pay it, the different types of national insurance, who pays national insurance, some numbers, the amounts that are payable, and also to comment on the proposed increase in national insurance contributions that's going to kick in April 2022. Hi folks, welcome to another weekly episode of I Hate Numbers, the channel that's there to increase your financial awareness, improve your money mindset, help you make more money in your business, save tax and time. What's not to love about that? Let's crack on with the video. Now firstly, what's the rationale behind why national insurance is there and why we pay it? It was initially introduced back in 1911. It was again upped in 1948, and it's there in theory to help pay for the NHS, state pension and other benefits that the government provide. In reality, the government can dip into those buckets of national insurance and use it to fund other projects. Who actually pays national insurance? Well, there are three groups of individuals that actually pay national insurance. Number one, employees pay national insurance. So if you're the director of your own company and you're on a payroll, you are subject to pay national insurance. If you happen to be working for another company as an employee, then you are subject to national insurance. The second group of people is the employer. Employers also are liable to pay national insurance, and they're called employers' national insurance. The third group of people who will pay national insurance are the self-employed, what you might call freelancers, individuals, effectively self-employed individuals who complete the orange section in the UK tax return. What are the different types of national insurance? Now, perversely, there are actually 5 types of national insurance, and they're all described by classes. Class 1 is payable by employees, and within Class 1, you also have Class 1A and Class 1B, which is the national insurance that's payable on employer-provided benefit. Employers also pay within Class 1, and they will pay the employer's national insurance accordingly. There is something called a Class 2, that is paid by self-employed individuals. The amounts of these I will explain in a few moments. Class 3 is what's called a voluntary contribution, and I'll explain in a few moments as to why somebody may wish to volunteer to pay national insurance. And Class 4 is another national insurance class, a category that's payable by the self-employed. So we talked about who's liable to pay national insurance, we've talked about the different classes, we talked about the rationale behind national insurance. Now let's get some numbers here and talk about the amounts and what is payable. And then we're going to round up by talking about the proposed national insurance increase in April 2022. Now, I'm not going to be too specific on the numbers here. Please do check out the YouTube notes, and I'm going to provide a link to a table. Because national insurance rates tend to change each year, I want this video to be evergreen, and I'm going to give you some broad numbers here to play around with. Now, the first thing is that employees and the self-employed largely pay national insurance on the same level. So let's deal with employees first of all. Now, anybody who earns below £120 per week does not pay any national insurance. You then have a next level that goes between £120 and £184. Again, these rates are subject to change, and these are the rates I'm quoting in this video for the year 21-22. Please check out the YouTube notes, and these rates you will find will change over time. I've got historic rates in there, and then when the time comes, we'll put in the new rates as well. When you earn between 120 and 184, you don't actually physically pay any national insurance. Your employer does not take anything off you, but you're what's called credited with national insurance. And what that does, that helps preserve your national insurance record, and that goes towards your state pension. Anything over that next level of £184, approximately £9,500 a year for 21-22, then an employee will pay national insurance at the rate of 12%. Once you hit the higher rate threshold, approximately 50,300, 5270 you want to be exact, then you'll pay an extra supplement of 2% on the excess. Employers have no upper limit, and they pay currently a flat rate of 13.8% national insurance contributions on a figure over the first threshold. Again, check out the YouTube notes for a table to see those exact numbers. What I'd love us to do is to get a grasp on how the national insurance actually operates. National insurance paid by an employer is paid on the value of benefits provided, things like company cars, company houses, private mileage and the like, and that is paid 13.8% on an employee's earnings. Now, when it comes to the self-employed have two classes, as we mentioned earlier, of national insurance. There's a flat rate called a Class 2 national insurance, and that is levied on profits over about £6,500. Now, for self-employed, that figure for earnings is described by profits that are included in your tax. Now, £6,500, you pay a flat rate currently just over £3 a week. And then if your profits are over about £9,500, you pay another type of national insurance, which is at 9%. And that's on the profits. Again, it's 9% up to and including a higher rate tax limit. Once you go over the higher rate tax bracket, then you pay an extra 2%. I'm now going to talk about Class 3, and Class 3 is a voluntary contribution. Now, the reason why you might wish to pay a voluntary contribution is because if you're self-employed and you don't pay enough national insurance, then your state pension records will not be updated, and you've got to have at least 35 years worth of what I call eligible national insurance contributions to clock up a full state pension. So you can, even if you make no profits, you can volunteer to pay a national insurance contribution. Also, if you're an employee, if you're self-employed and you've got gaps in your national insurance record, then you can make an additional contribution to access the full state pension. Details are included in the notes here. Check out the Government Gateway to see what the procedure is itself. Let me now round up by talking about the proposed increase in national insurance contributions in April 2022. Now, there's an overall 2.5% hike, and that's going to be split between employee and employer. So that means if you're paying currently 12% national insurance contributions, you'll pay 13.25%. Where an employer pays 13.8%, they'll be paying just a shade over 15 percentage points. Now, for an employee, what that means is, and numbers are a strange beast, aren't they? That typically on a £20,000 salary, in percentage uplift, you'll be paying an extra 10 percentage points on pound note national insurance, about £130 a year. If your salary is about £50,000 a year, you'll pay an extra £500 odd per annum on national insurance. Now, this does not escape the self-employed. Likewise, when your profits are such that you're going to be paying at the 9%, then you will pay an extra 1.25 percentage points on that. The group of people that escape this, by the way, perversely in a paradox, are those people who are retired at state pension. This fund is predominantly there for funding social care, but in the 22-23 tax year, those group of individuals will not be subject to any increase. Fast forward 1 year after that, by the way, and in 23-24 onwards, that increase in national insurance will in theory be stopped, and instead it will be replaced by a social fund levy, payable by all, including those who are at retirement age. Okay, folks, I hope you found this useful. If you found it useful, I'd love it if you could share with those who would get some benefit from that. Give me some feedback. I'd love it if you could subscribe to the channel. And until next week, folks, have a good week and don't have nightmares.